Wolf Theiss Soundshot, taking a close look at legal topics in Central, Eastern, and Southeastern Europe. Welcome to the next episode of the Wolf Theiss Soundshot. Our guests in this episode are Peter Oberlechner from our real estate team and Andreas Rieder from CBRE, the world's largest commercial real estate services and investment firm. Andreas and Peter explore how real estate assets have fared through the COVID crisis, what measures the legal industry adapted to accommodate such rapid changes, and what the market may look like going forward. Peter is consistently ranked as a leading real estate lawyer in Austria and the CEE, specializing in complex, large-scale real estate developments and transactions. Andreas is the managing director of CBRE Austria and the chairman in Central and Eastern Europe. He has extensive real estate knowledge, particularly in investment markets, and is specialized on the issues of market development in Austria and the CEE. Hi, Andreas. Hi, Peter. Welcome to the Soundshot. We're very excited to have you both with us today to discuss real estate in the times of COVID. As you know, we're still in the midst of this pandemic, but far enough into it that we are already seeing trends develop in the real estate market. So I thought we could talk a bit today about how measures enacted by several countries to combat COVID, whether that be social distancing, home office recommendations, or the lockdowns many countries faced earlier this year, how those measures impacted real estate assets, how the legal industry responded, and maybe what we can expect in the future. So, to get us started, Andreas, do you mind giving us an overview on the impact of COVID and what it has meant for real estate assets?
Yep. Okay. Thank you for the introduction. Obviously, different assets have been impacted very differently. I start with the more negative ones and then I move towards the more positive ones. So you have a positive development here in our podcast. Hotels are definitely the asset class that has been impacted most severely. When you look at the cross-border tourism in the world, it decreased in the second half between 60 and 80%. And half of that happens in Europe. So Europe has been impacted heavily by the implosion of the tourism market, but obviously also the business travel has come more or less to a standstill. And city hotels have been even more impacted than hotels for leisure. For example, on the Austrian lakes, they had a relatively okay summer. But Vienna had a vacancy rate of 80 to 90% this summer in the hotels. The second area that has been impacted most is obviously retail. First of all, for many weeks, retail has been closed down, apart from necessity shopping. Retail, and on the other hand, e-commerce has taken over a lot of the shopping that normally was done. For example, in the US, the e-commerce share of total retail has increased in the first half of this year from 16% to 21%, so a massive booster for e-commerce. Within retail, different asset classes again have been impacted differently. The most stable were retail parks that are food anchored. They have even seen some increase. And inner city high street retail shopping has been impacted most. Again, obviously, because the lack of tourism, who are the ones who go to Louis Vuitton and Chanel, and they saw their trades disappearing gradually. In the middle of the assets was or is offices. So offices has done relatively well, but obviously home office is now a dominant element and will not go away. But tenants are still paying rents and people are coming back, and everybody is convinced offices will still be needed in the future, but in different forms. And maybe we can talk about this also later. Then the winners, there are two winners. The first one is residential. So obviously, so investors who have their billions to invest every year, they had a clear preference to go more into residential. In Austria this year, for the first time ever, a third of all investments in the first half was residential. Normally, a few years ago, this was only 5%. Prices have gone up, and obviously also even in a lockdown you have to live somewhere, and residential has proven as being extremely stable. The last asset class that has maybe benefited most is logistics. Several trends. One is the e-commerce. We always say every shop that dies creates a new logistics facility because these goods must come from somewhere and handled somewhere. But there was a second trend helping logistics, the fact that borders closed down or it was really difficult to cross borders has meant that many of the big suppliers of goods had to make sure they have logistics facilities in all the countries. So they have gone away in many cases from let's say, a CE hub that served all of CE to renting logistics spaces in every country to make sure there is constant and undisturbed supply to their customers. In Vienna, again, we had a record take up of logistics space this year, and we estimate in Vienna this year there will be about 300,000 square meters of warehouse space rented. That has never ever happened before. So that's a short overview. Thank you.
So, Peter, what effects have the developments that Andreas has described had on the legal side of the real estate market?
Well, first of all, thank you, Andreas, for this, as always, very concise market overview. I mean, as you know, our profession really follows what the industry does. We are service providers and we are not inventing things. We are just trying to do them as good as we can. So, at the onset of this crisis, I think everybody was really shell shocked. What we saw is that there was as we perceived it, a standstill to new transactions. Already, transactions that were already going on were coming either to a halt or slowed down considerably. Everybody had to adjust to a new situation that was really strongly shaped by lockdown, by access restrictions, and the like. And everybody was busy at the beginning to sort out what would happen to rents, to streams of income at the beginning. That was, I think, for us on the legal side, the beginning of the crisis. When the fog started to lift, we saw, I would say, some major trends emerging in the market that are still kind of going on. What really also had to do with the fact that there were so many travel restrictions and people were unable to meet, which unfortunately seems to be again the case that we have travel restrictions, etc. And we don't know how long this will go on. The whole COVID situation has strongly boosted all that has to do with digitalization, having virtual meetings, having virtual contract negotiations, having virtual notarizations of agreements. All of this became really important. For investors, it became important to have the possibility to have fully virtual data rooms that they could be inspecting rather than visiting assets in person and doing site visits, which usually is very important for real estate, for all classes of real estate. So I think that was really an immediately visible development that we saw on the so to say, on the legal side, using web-based digital tools for transactions. And I would say what we then gradually saw coming and what we see ever increasing now, the longer that this situation goes on, is also a certain paradigm shift to certain aspects of contracts, how contracts are made up, what their key essentials are, what they look into, and also the legal aspects of how real estate is being developed. Now, I think that is really, I probably will go into more detail at a little bit progress time of our discussion. I think that is kind of really the flavor of things as I currently see them.
Thank you for the overview. So, it seems evident based on both of your statements that the pandemic has caused immediate changes to investment trends and legal practices in the real estate market. So, we know how it has already affected real estate, but what can we expect in the near future, particularly regarding troubled assets you mentioned, Andreas, such as hotels, retail, offices, and so on? Will these trends continue?
Yeah, so first of all, when you start with hotels again, this is something that will go away. So the travel will come back and tourism will come back and business travel will come back. It only will take a few years. So we don't expect next year everything to be good. We expect it to take probably 4 to 5 years until we are really back where we were pre-COVID. And in the meantime, that means several things. So first of all, that every, at least in Vienna again, every hotel project that has not started yet construction is currently being uh, put into another use. So it will either become offices or residential or student living or whatever. So, but that's a short-term impact. But in general, I would say the hotel world will not look very differently in 5, 6 years than it looked today. The other retail, I would also say COVID has only accelerated all the trends that have been here before. So this mega trend to e-commerce away from physical shopping that has been here before. So it has sped up definitely. And Western Europe, I mentioned the US numbers. Western Europe is maybe even more dramatic. So online moved from 10 to 15% in the first half year. That's something we thought would take 3 years at least to get there. So it's a trend that has been there. But then when we look at offices, there things are happening that we did not expect and that are really new. This really strong movement towards home office, this will not go away anymore. And offices, therefore, will look differently in the future. We do not need offices anymore to type all day or to search the internet. We need offices for meetings, for creativity, for bonding, for whatever. So the offices will definitely be different and also the location. So we think there might not be just one headquarter office, there might be satellite offices at the edges of cities. So for certain types of work you want to do and not having to commute all the way to the headquarter. So in offices, definitely there are changes due to COVID that we have not seen before and that will not go away. Um, Logistics is again just an acceleration of things that have happened before. Residential is probably an asset class where things are changing in a way that we did not expect before. So this trend definitely away from these tiny micro apartments where you have to sit on a bed and work all day if you do home office. That's probably something not a lot of people want anymore. Everybody now talks about at least a balcony, a terrace, a garden they want to have access to from their apartment as well. And this mega trend of moving further away from the city, which is now more feasible when you have only go to the office 2 or 3 days a week in the future. This seems to be more important to the really big cities. So in New York and London, there are already lots of studies about how many families have moved during the summer to faraway suburbs for good with their families. They have put their children in new schools. We don't see that in Vienna and in the smaller European cities yet, but to some extent maybe. So you don't move to Hitzing, you move to I don't know, to Klosterneuburg or whatever. Yeah. But not at an extent that we see in the really big mega cities in the world. And this will have an impact on these mega cities because before COVID, we always said the future is the worldwide mega cities. And that's where, I don't know, 70, 90% of the world population will live in 30 years. Now, with COVID and the pandemic, everybody's rethinking that assumption, and it now looks to be a much more greener, widespread, distant living again in the future. Yeah, so these were the initial thoughts on that change subject.
Thanks, Andreas. So, Peter, I turn to you. What do you think this means for the future of contracts and lease agreements?
Well, that's a very good question. Allow me to flag 3 points that relate to the developments that Andreas has described, where we see, other than short term, I would say mid to longer term effects on what concerns us as lawyers, what our legal realities are. The first is that we see a what I would relate to as a kind of a paradigm shift for commercial lease contracts. Um, Contract terms are getting shorter. Tenants want to have more flexibility. That applies both to office tenants as well as to retail tenants. Not so much in the residential field, clearly, but that is something that's an entirely different world. I think that has to do with the fact that, of course, there is this increased trend to home office and that enterprises are not yet sure how to cope with that also in future when the pandemic is over. But clearly, it's a cost factor. Um, it's also an interesting environmental factor, as I think home office and all that relates to, because it helps to save congestion. Commute times are shorter. It helps to save time and resources at the end of the day. There is a trend to smaller units that we see both for offices as well as for retail. Several tenants have scaled down their this may change again when when the economy kind of is again in the is jump starting again, hopefully at some point of time. But for the time being, this is clearly the case. And another fact that is important for retail leases is that there is an increased trend to turnover only leases. There was always a distinction between a base rent and a turnover rent in retail leases. And of course, on grounds of present uncertainties, tenant want to basically tie what they have to pay to the landlord only to the turnover, ideally, that they achieve, because they have no certainty about whether or not there may be additional lockdowns or other restrictions for people to visit their premises. Another, I think, factor that plays a strong role is that risk allocation is clearly absolutely key for real estate related contracts nowadays. In the old days, we lived in a stable environment without major crises and catastrophes. So COVID has made us aware that this is not a given. And after COVID-19, there could always be COVID-20. There could be other types of events that kind of affect lives strongly. So risk stemming from such events, who should bear the risk and to what extent, has become very important in all sorts of real estate contracts, be it leases, be it development agreements, be it financing agreements. I think the general industry, all contracts that relate to this industry. And the third, I think, key point in this respect to mention is that clearly, when speaking about the future of offices now, future of buildings now, they have to be what I would vaguely describe as pandemic safe. Of course, this is a far-fetched term, and there is nothing that really prevents human beings from catching a virus, but safety concerns play a much stronger role for the development of new buildings and also for the fit out of existing buildings, air circulation rate, for instance, touchless features, etc., etc. This all plays a role in, and we see that very strongly on the legal side, also related to the uh, factors that Andreas described.
We have time for one last question, and I would like to ask it to both of you. And that is for some final remarks on the trends and changes we've discussed throughout the episode. Which of these do you think will remain? What do you foresee as the new normal in the real estate market?
Yes, as I think I said before, that the things that are just accelerating because of COVID, and there are new things like residential, maybe moving to other locations or offices looking very differently. Just when I listened to Peter talking about short leases, flexible leases, I just wanted to mention co-working as well, because co-working was basically the only one before COVID who offered very flexible office leases. And they had a very difficult time, obviously, because that's exactly what their concept was, to allow flexibility to their users. And their users have used it and have moved out and moved their staff home or to headquarters. But the concept has been proven. And so I think long term, that's really good for the co working providers, but this year it has been terrible. Just an example, Paris, last year 30% of the entire new office space leases were signed by co-working providers, and this year 0% so far. So they are not an active tenant at the moment expanding, but I'm sure they will come back because that's exactly what the market wants more and more, flexibility, and they offer it, and that's their business to offer it.
I think what COVID has shown is that real estate as such and as an asset class has, of course, not lost its appeal. It is, in many respects, solid as an investment as gold, also for the years and for the generations to come. Some of its use may be different in future. Some of the hotels that we now see may be apartment buildings in future, may have a mixed use in future. The same applies for shopping malls. They may be may have a stronger focus on whatever entertainment or food in the future, but there will be hotels in future. There will be, and they will be a valuable and important asset class. There will be shopping malls in future. They will be a valuable and important asset class. Of course, logistics is booming. This will not go away. This is something that has to do with the trend of digitalization. And of course, the demand for suitable living, housing, also this is something that will not slump down in the years to come. We may have different needs, we may have different preferences, and I think that's an interesting thing and a valuable thing as well. But also housing will, of course, and that's another asset class that is, at least as far as just looking at the data that we see in Austria alone, will be a very important asset class also in future. So the bottom line is COVID has changed some things about focal points of real estate and different approaches, and it shows that there are different shades and varieties of how things are done. But real estate is as important an asset class as it had been, and this is certainly granted for the future.
Thank you for joining us for this episode of the Wolf Theiss Soundshot. For more information, you can contact us via email at soundshot@wolftheiss.com or visit our website at www.wolftheiss.com. You can also follow us here to receive further updates on developments in law and business from one of the leading law firms in Central, Eastern, and Southeastern Europe.